Welcome back. Probably in 1 year, banks will have to start providing for loans before they default, even when they start showing stress. What impact can it have on the balance sheets? We are discussing with Mr. Dinesh Khara, Mr. S.S. Mundra, Mr. Harsh Vardhan and Mr. Krishnan Sitaraman. Gentlemen, thank you very much for waiting on. Mr. Mundra, do you think it is something that can be done? Say, do we get the final guidelines and the date by, say, in another 6 months, effective date? Do you think the Reserve Bank itself has that level of modeling and sophistication?
Well, Lata, I think the first point of preparing the model is start with the bank. Then there will be a process of validation. I think even external validation is something which could be looked into it. But if I look at the complexity of the subject and also the approach which RBI has been following all along, my sense would be by the time we see the final guidelines in our hand, because now this is a discussion paper, it will be followed by a draft guideline where would again be a public comment would be invited, and then the final guidelines will come. And then there will be again a period of 1 year to prepare the models and all that. So one thing, this 1 year from now, the provisioning requirement or even the dimension of provisioning will not be coming in 1 year from now. Because if you also include that period of 1 year, my sense is anything between 18 months to 24 months would be the horizon where we would have this sense in our hand. So I think that will be my sense around the timeline.
Okay. Mr. Harsh Vardhan, what is your sense about, when we can start and, whether legal changes will be needed? See, in AQR, the government was resisting because capital was needed from the government. Right now, it doesn't look like government has to capitalize any of the public sector banks. So, any previous legal changes needed?
Lata, allow me just one quick point, because it was talked about. We have said that the current provisioning levels are very high. Bear in mind, these are provisioning for already defaulted loans. In the new regime, we'll have to start providing a significantly larger amount for even the standard loans. Today, the average provisioning for standard loans is 0.25%, 0.25. So there is a long way to go. So the fact that we have over provisioning today does not give me much of a comfort, because the standard book is not being provided for. Now, coming back to your issue about legal, I'm not a lawyer, Lata, but I feel that the Nationalization Act that governs PSU banks actually also includes the way their financial statements will be prepared. And I don't know whether that will prove to be an impediment in implementing this. If that be the case, then that bit of the law will have to be changed. My own sense was that was one of the reasons why India's implementation to PSU bank was halted. So I don't know if that's the situation, but maybe some legal expert will be able to advise on that.
Fair enough. Actually, this is a very good point you make, that all this provisioning is for already defaulted loans. So, there is a whole new gamut when it is yet to be loans that are yet to default. We have not provided anything for SMA loans that are 60 days past due.
Or even standard loans. The current standard loan provisioning is 0.25%.
Which is what I want to ask Krishnan actually. Krishnan, most of the AAA companies and even AA go to the market partly by RBI fiat itself. Chances are the standard average of loans that come to the bank will be BBB. And this was Mr. Harsh Vardhan's guess as well. So, a provisioning of what is the provisioning needed for loans like that? Could the standard provisioning itself go from 0.25 to what? 2.5, 3%?
No, I think that's a very valid point. The provisioning levels definitely will go up with this path-breaking kind of new dispensation. What I was trying to make a point is, if this guidelines or the change was introduced 5 years back, then the impact on the banking system would be far higher. Today, the banking system has a higher degree of provisioning coverage. So the incremental impact would be less today as compared to what it was 5 years back. But definitely there will be an increase in the provisioning requirement going forward when this new dispensation is implemented.
You all have not come out with any number, Krishnan?
So it's, as I said, it's very difficult to envisage it at this point of time because there are some nitty-gritties, some the specifics which are not yet here. For instance, RBI has said that they will come out with a prudential floor because the underlying provisioning is to be left to the banks. The models are left to the banks. Now, there could be variations between bank to bank when they come out with these provisioning or impairment charges. So RBI will subject that to supervisory review. And if they feel that some of the banks are giving a lower number, they will come out to avoid that, to mitigate the issues there. They will come out with a prudential floor.
Mr. Mundra, out of time, therefore, final thoughts from you. Even this niggling worry, do you think PSU banks will have a little more to provide for than private banks?
Well, Lata, I think I would put it like this. I mentioned in the beginning, is a huge unknown as of today. And also it is subject to 3-4 major points which are out for discussion, but where a final view is not taken. But, you know, if you look at what happened in last 3, 4, 5 years, the whole composition of the books. Earlier, the problem with public sector banks was that their composition of their books was leaning very highly towards the large credits. And then there had been event which we know. Because of that, most of that books, you know, has been either it has been dealt with, or it has been provided for, or it has been, sold out and all that. Many, most of these banks are also now having the book which is well balanced between the institutional credit, retail credit. Of course, MSME is one segment, I agree, which is still predominant with PSBs, but there are also major changes are happening in last 1.5 years.
Mr. Mundra,
and
may I squeeze in quickly one, only you can answer. Do you think that, this problems like discom loans, I mean, banks were arm twisted into providing more even when the previous loans were, huge outstandings, visible stress. Will all this go away, or will all this compound the problem for public sector banks?
No, even look at the discom loans and all that. The model in which they were being given earlier, and then certain provisions came, and the model in which they are given subsequently. And with the top of that, the recent, directive by the regulators in electronic field, where all the overdues are, getting recovered by the power producers. So I think enabling legislations are also coming. My sense would be, yes, difference would remain. Probably PSBs would be, but I would say they would be marginally impacted on the higher side. It is not going to be a very huge difference between the two kind of entities. That would be my sense.
Okay, sir. We'll have to leave it at that. We're out of time, but this is only the first of the conversations. But let me assure you, this is a change that is coming into the banking system, which is almost as seminal as allowing private sector bank licenses. It's a big change, and therefore it's a change for the better. Wrap up on this edition of India Economics. Thanks for watching.